Good morning. This is Pat Walker at Mission Winners. Probably already know that. Hope everybody's well here on a kind of a blustery night, but it's, again, I guess it depends on where you are on the world. What are we talking about tonight? I think this is very relevant. In fact, this is a topic that's always relevant. Navigating the markets. You can say, well, Pat, what's your background in this? I've been doing this since 1986. I managed a ton of millions into and through the crash of 87. So do I know how to navigate the market? Well, I've learned, but I'm also grateful for this. Through these years, I've met some wonderful investors. I've met Bill O'Neill. I met David Ryan. I met Mike Webster. I met Marty Schwartz. Okay. I met Ed Secoda. These men had a profound impact on my life. And especially going into the crash of 87, Martin Zweig was the one who really helped me in that respect. And I'm so grateful to have met him. But why are we here? Just to understand the markets and how to navigate them, how to manage them. A lot of people don't know what to do. And I've been doing this a long time, so I'm grateful for this. I have a little bit of what you call experience. But at Mission Winners, our goal is this, is to speed up your learning curve, to make it easier and faster for you to navigate consistently with what's going on. And there's a great quote that I learned from Dave Landry years ago, and it saved me, and it has saved me through years. And this is one you might want to take note of, okay? I'll believe in what I see and not in what I believe. I'll believe in what I see and not in what I believe. I really mean this. I'm emphatic about this. Please don't impose your will on the stocks and don't impose your will on the markets. Okay? I really mean that. One of our main foundations, and I learned this a long time ago, and it guided me. This helped me avoid the crash of 87. I let price and volume guide me. The market was starting to roll over, and I said, you know what? The stocks are falling. I started selling, not that day, well before then. Anytime there's been a major decline, we've been able, and I'm not bragging, okay, it's a lot of work, managing your account. I'll say it again. I'll believe in what I see and not in what I believe. Credit Dave Landry. Get in line with what's happening. You will do far better. And it does something else really important, folks. It takes the stress off of you. Okay, like, God, I got to figure it out. I've got to figure it out. No, let price and volume guide you. You can say, well, in what realm do you use? Well, I'm going to show you the Dow 30 here, okay? This is something very important most people don't know. This is only 30 stocks. It's price weighted. It's really not relevant to decision making. What is? This one right here, the S&P 500. And what do I use? I use the spiders, all right? You can say, well, Pat, why do you use the spiders? Well, it's real time. I like that. And it combines price and volume action real time and tells us what to do. We don't, again, have to forecast. We get in line with what's going on. And if it's going up and the volume's decent, you stay with it. If it starts to get sloppier, you get careful. Right here on a bar like this, I'm going to make this a little bigger, show you. When you see a bar like this dropping like that on volume, it's a warning sign saying, hey, you better be careful. And this is a very important lesson and tactic. Taught it at the IBD meetups for 12 years. Study each price and volume bar. You'll master it. Looking at open, high, low, close. It will really help you in the decision-making process. Someone's going to post something here. Here we go. My apologies. There we are. Get that. Thank you. Now I think we're ready. There it is. My apologies. So we're looking, you haven't missed anything yet because I just had a chart of the Dow up. Now we're getting down to the nuts and bolts. We're taking here, looking at the spider chart, SPY. And is that what you're seeing also, Owen? SPY? We're getting it here, team. I promise.
Yep, got switched over. You're all set.
I'll continue talking till I have confirmation of this. My apologies. Just got to work through a few different technical things. Very important, team. I'll say this again. Circling back, monitoring price and volume of the charts. We're taking a look right here at the spiders. This is a daily chart. And I'm going to give you a couple of great technical insights that will help you in setting up your charts. Protect your eyes, first off. I've done a lot of research on this too. Protect your eyes. Have a black background. Don't have a light background. You're literally staring at a light bulb all day. Also, high color contrast. Black background and colors. Red and green, kind of like a stoplight, okay? Red and green. Red is down, green is up. And a great tactic, combine that with the volume bars. If it's a red price bar, it's going to be a red volume bar. It will help you see trends much faster and easier. You will be able to distinguish strength or weakness very fast. And it works. This is a daily chart. Let's talk moving averages here. I want to nuts and bolts everything for you. This is the green line right here is the 50-day simple. The blue line is the 21-day exponential, and the yellow line is the 8-period exponential. These are great moving averages that will allow you to see trends much better. Also, I do the same thing. This is a daily chart. There's the monthly. There's the weekly. It allows us to see trends much better. A great tactic for all of you, and again, I just want to help people, have charts side by side on a template, weekly on the left, daily on the right when you're screening and scanning to see the nuances on the bigger picture, the weekly chart. It'll really help you. I share this with the VIPs darn near every day when I make the videos for educational and coaching examples and guidance. So that's just nuts and bolts. And I said, another important thing, high resolution colors. This is a great setup. I encourage you to use it. This is a weekly chart. And again, here is the daily chart. Looking at price and volume. Going back to the weekly though, you can see through here, it was quite violent, wasn't it? And look at the selling volume on that bar. Back and forth and back and forth. When you see action like that, it tells you be a little cautious. And then you also combine it with what the stocks are doing. And we're going to talk about leading stocks in just a little bit. We're going to get down to it. But the big picture, M and mission winners. The M comes first for a reason. The markets. What are the markets doing? And I'm looking at two things. I'm looking primarily at the spiders. That tells me a lot I need to know. I'll also take a look at another one as QLD or QQQ. I like that because it's price and volume. Or you can use SSO also. And you can see price and volume. This is the weekly chart. It went up, but then it fell, chopping back and forth. When you see this, an action like this, it tells you be cautious and just watch it. It will tell you so much of what you need to know. And you can also do this. Here's the daily chart. Whipping. Oh, look, it's going up. Oh, they knocked the tar out of it. Boom. Look at the selling volume on that bar right there, folks, versus the buying volume on these bars. Was the selling volume a lot heavier? You bet it was. Look at that red. It really helps guide us into, hey, it's kind of wide and loose here. They're whipping this thing around. When you see this, be cautious. Be very cautious. Please don't impose your will on the stocks. That will really help you all the way through. Now, it starts to pick up, and then they gap it down again on QLD, okay? Back and forth. So you can say, well, this is a little choppier here. Now, here's a valuable lesson for everybody, okay? You look at the indices, but what, again, is the final arbiter of what to do, okay? The final guidance, the final guidepost. Hey, we've looked at the indices, but now we go in and we look at the leading stocks and the leading groups and the max list. The max list is a powerful list of stocks that I put together a long time ago, and money is made there, okay? I mean, big money. So we're going to go in and we're going to take a look at some of these stocks. But I encourage you, Please follow the rules. And I need to back up here and say something very important. Stock selection. Let's talk stock selection before we look at charts of stocks. Focus on stocks, as I said, in leading groups and the leaders in those groups. Stocks, you want to dramatically improve your investing results? Key on stocks, make a filter. Stocks that are within 20% of 52-week highs. They're showing strength already. Dramatically decrease the universe. I don't want to look at a million different charts. I want to try to look at just, 50 to 100, maybe 200, and know them inside and out. And then screen those down further as far as the best chart patterns. So leading groups and leading stocks. Another key point, no low price stocks. As I stated earlier, they're low priced for a reason. Stick with stocks over $10, $12, $15 a share. They trade over 200,000 shares a day. And now we're going to get to the good part. With a composite rating, this is really big, folks. Research from a lot of the people at Investors Daily Market Search, they talk about this. And I've met some of them. I've been to Kingston Level 3s. I know some of these people there, okay? Composite rating. Focus on, this is what I have on my screens. I have a composite rating of 88 or higher. Now, some people say, oh, you ought to cut it at 95. I want you to think about something. We're very pragmatic. Let's suppose you run your screens on the weekend and you have a stock that it has a composite rating of 88 or 90. Well, you've cut yours off at 95. You're going to miss some of those that maybe Monday or Tuesday, they may have good news or earnings and it spikes up in price and you miss it. And also, by that time, after that move, the composite rating moves over 90, but you've already run your screen, so you won't know about it. So run your screens on the weekend and make them a little looser. It will really help you. Focus on stocks. I'll say it again. And what you can say, why do you repeat it? Because there might be people coming in late, and I want to get everybody up to speed all the time. Also, I think it's very important. I used to periodically teach outdoor survival skills at higher elevations. I pounded the tar out of people. What to do, over and over, so it became automatic. All right? Similar situation, especially when you're up over 14,000 feet above lightning, you got to know what to do. Focus on stocks, all right, with a composite rating. For me, on my screens, when I run them on the weekend, 88 or higher. Focus on stocks with a relative strength of 85 or higher. Focus on stocks with an accumulation distribution of A or B, within 20% of 52-week highs, the top 50 or 60 groups. No low price stocks, over $12 a share. They do 200,000 shares a day. Right there, folks, that's a recipe to make money. Okay, these are the screens I use, and it works. Now I'm going to take it a step further to help you. Run your screens. When you're done running your screens, sort it first by industry group rank, and secondly, percent off high. Leading groups, and then the leading stocks in every group. The cream will float to the top. You'll see it. When you're running down your list, you'll say, oh, these are all the same stocks in the semiconductor groups. Boom, boom, boom. Oh, yeah, that one looks good. Oh, that one looks good. And the further down you go the list, they don't look as good. But you will have a great shopping list for finding and buying stocks. You can say, that doesn't have a lot to do with navigating the markets. It has a lot to do with it. You know why? Because we're going to focus on the leaders, which will help in navigating the markets. You won't be looking at or owning a bunch of junk. All right? And that's important. Remember this. We have a limited amount of money and we have a limited amount of time. Let's use both wisely, right? I mean, I think it's awesome. So you've run your screens and I've given you constraints to use. All right? Now, that's the fundamental side of things. Now we take it down. There's some technical in there too, because you're looking at stocks within 15 or 20% of 52-week highs. And again, no junk, no junk. You've already got quality, fundamental quality there. Run your screens, sort it again by industry group rank first, percent off high second. Then what do? You've got your master list for the week. And every night, what do? I run through the list, hitting my space bar, going from one chart to the next to find winners. And it works. Now let's talk about winners. the traits of winners. Well, we talked about the fundamentals, okay? We've covered that composite rating, earnings, everything. Let's talk technicals. Focus. This will really help you, folks. And again, there's no substitute for seat time. I know I've looked at millions of charts through the years. All right. And it's not like, oh, I'm a fanatic. I had to get this right. You know my background. I had to make the money for the family. Focus again on simplicity, the leading groups and the leading stocks in those groups. And what do we want to see? Let's talk charts now. Now we're getting down and dirty. Focus on stocks that are clean and simple bases. People say, and again, I was an IBB co-leader for 12 years. So yeah, I know the systems. I taught them every month on the stage. People came from California. If I was saying the wrong things, I think they would have yanked my chain and say, you can't do that. All right. So simplicity is a great thing. And I'll say it again. If you wait for the cup and a handle, you're going to starve to death. Focus on simple chart consolidations. Why? Let's think about this. If it's a simple, relatively flat consolidation, charts are a reflection of a tug of war. Buyers and sellers, buyer decisions and sellers decisions. And one side's going to win and then another side. But eventually everything settles down and a chart just kind of goes sideways. It kind of goes flat. The tug of war between buyers and sellers has leveled out. Nobody's winning, nobody's losing. It's just settled down. That's what you want. Because eventually, either the buyers are going to take over or the sellers are going to take over. And you will see it in the charts. And how will you can say, Pat, how will I know? What will I look for? Well, I'm going to show you. You're going to see it in the chart action with the price action lifting backed by volume. I love it. And it works. Now, you can say, does it work every time? Folks, nothing works every time. Let's not sugarcoat this. If it did, Bill O'Neill wouldn't have had to have rules about limiting losses, would he? But he did. He's pragmatic. He knew. So what's the idea? Simplicity and entrance, and you will find, and you'll see chart examples. We're going to show them. You know, they say a picture's worth 1,000 words. I'm probably going to show you 20,000 words tonight. Don't worry, I won't talk 20,000. Well, I might talk 20,000. Once I get going, I can't stop. No, I'm teasing. The idea of if it's simple for me to see and it's simple for you to see, it's simple for other to see. And if that's the case, they see it too, which means, oh, look at that Acme company. Boy, that's a pretty good base. Yeah. Oh boy, I guess if it takes out $22 on volume, that could be a buy. We're not the only people in the world that see it. I'll tell you a great story. Decades ago, when I was, well, it was 3 houses ago, we're in a different house, and I was talking to a buddy of mine, and he said, Pat, he calls me up. He's a trader in California. He used to work on a trade desk. Pat, I found a pattern that nobody else knows about it. This is going to be huge. We're going to make a ton of money on this. He used other words, but I won't do it here on this video. And I said, well, what is it? And he told me all about it. And I said, wow, that's interesting. He goes, nobody knows about it. And I said, so can I ask, if only you and I know about it, nobody else knows it, well, they won't see it. And no, they won't. I said, well, then if they won't see it, they probably won't buy. And he says, oh, yeah, that's right. Focus on simplicity in the patterns, folks. It'll really help you. And I need to also say this with you. This is important. We're talking about navigating the markets. Again, focus on the weekly and the daily charts. And when the stock is pushing through or approaching the pivot, this is a great lesson, folks. This is the real world. Okay. By the way, I want you all to notice, I didn't have any wealthy relatives. I didn't inherit a bunch of money. Okay. My dad died when I was in my 20s and I was helping to support my mom. So it was just me doing it. And then I was married with 4 kids. So the idea, focusing on simplicity increases the potential for you to make money. And it also lets it stress, which leads to clearer thinking. And you can say, oh, that's kind of a mouthful. One of my degrees is in psychology. And so it's something that I've studied extensively. Okay. And practiced outside of this realm also. So let's take a look at a couple things here, okay? We're going to take a look at QLD. This is a daily chart, and I'll shrink it just a bit so you can see. You say, and that baby's kind of whipping around. Oh, look right here. Oh, it's going up. This is it. It's it. Oh, man, this is great. Notice on this advance here, just take a look at this, folks. When it was going up, I'm going to draw a line to help you. When it's going up here, how was the volume at that point in time? It wasn't going up with volume. Volume's power. Volume's the fuel that lifts the ship off the pad, folks. They're not buying it. So it goes up, it kind of stalls, and then boom, they knock the tar out of it. Price backed by volume will really help you. And then it goes up and they slam it down. It goes up and they slam it down. It goes up and they take it down on a gap down. This is high investor emotions. This will chew you up alive. You have to wait for the dust to settle. The true is on the indices, and it's also true on the stocks. Now, a lot of people say, well, I'll just look at this, and if this is no good, I'm not going to look at any stocks. No, we have to look at stocks too. All right, this is a business and we run it like one. And there's another reason why. We're not buying QLD, we're buying individual stocks primarily, correct? So there's QLD. Let's take it a step further. There's SSO whipping around. Look at that. I mean, it goes up. They knock the tar out of it, folks. Then it shoots back up. But note this. This is a valuable lesson. Look, it falls on heavy volume. Oh, boy, that's a pretty good bar. And then the next bar, it goes up. Well, it's an inside bar. But look at the volume drop off. Look at that. They didn't, the power was dying on it. And then the next bar, look, it goes up even more, but look at the volume drop off. Volume's the fuel that lifts the ship. And then it runs up here and it stalls, doesn't do much of anything. And then it starts to roll over again. See that? You've got to be careful with that. The moral of the story is this: how to navigate the markets. We have the focus at Mission Winners. We have the focus and the discipline to wait for the dust to settle, not just in the indices, but also in the charts of the stocks. And I'm going to circle back. We want the best leading groups and leading stocks. So there's SSO here, and we did QLD. So let's take a look. We've talked about the indices now. Let's go in and look at some charts so we can train our eyes and minds on what to look for. And remember, we're talking about navigating the markets. We have, and I hope you do too, and that's why you're here tonight. And I commend you for being here. When everybody else is out horsing around, you're getting better. Think about that, folks. You're investing in yourself. I commend you on that. That's what it takes. Investing in yourself, studying the charts. There's no substitute. I said this at the meetups for years. There's no substitute for seat time. All right. So we know about good technicals, good fundamentals. High composite rating. Give me 88 or higher. Give me a relative strength rank of 88 or higher. An accumulation distribution of A or B. You're going to find winners. And you dramatically, there's thousands of charts. Those constraints I just gave you, you run that, comes out to be about 200 to 220 stocks. That's it. And then you take out the ones that are looser, and all of a sudden, you're down to a very small, manageable list of stocks for the week. And that's what you run. Note also, we're not being lazy like, I just don't want to look at a bunch of charts. No, we just want to look at the best, right? Let's make good use of our time, which is also why you're here tonight. Good. So let's move on. I want to show you some charts just so you can see. Amazon, clean and simple base right here. Remember this. I'll say this numerous times on this video. Simple bases that are easy to see. Be pragmatic, folks. If I can see it and you can see it, does it not increase the odds that others see it too? Yeah. Isn't that what we want? Well, sure it is. So they'll buy. So got a little loose here, which is, indicative of the market. But simple bases. Here's app 11. You can say, well, I don't see anything here. Watch this. See that nice long base? That's beautiful. Look at the volume surge on that bar, folks. I'm going to show you something that'll really help you. We'll slide it over there. Well, it just, kind of ran up, but it pulled back. It's a longer base. I guess we'll just by the way, all these stocks have either great earnings or great statements. Like all of them have a high composite rating. Okay. I will tell you that. All of them did before they broke out. Okay. Just kind of going sideways. All right. So, well, I guess if it takes out this top across here, that'd be pretty good. Look at the volume pickup on this bar. We own this at 97.74. Okay. They voted, folks. Volume. People talk with their mouths and vote with their pocketbooks. They voted. And then it does this. and this and this. And some people say, God, I've never made that kind of money this fast. I'm just going to sell it. So you sell it right there. And it's kind of meandering. And then it keeps going. And it keeps going. And it keeps going. I'm going to walk up the 8 EMA. One close below the 8 that entire run. And it keeps on going. And here's where it is. There's another base. There you go. That's serious money. Folks, that stock was bought at $97.74. It's still owned. We've sold some into strength. We bought more at once or twice. We're in great shape. We just let it work. And that's where it's at now. And notice this, another great lesson for you. You see what it did down here? What did it do here? Oh God, it fell, Pat. Where did it stop going down? It stopped going on the rising 50-day. Remember this. We're not in a vacuum. Other people know about these moving averages and use them to their benefit. We do too, and it helps us. Support on the 50-day comes down to it and bounces. So we're in good shape with it. Refresh this real quick. We're in good shape with it and letting it work. But this is the important point. I'm going to show the NASDAQ comp real quick. Whipping back and forth like this, right? You get chewed up with all this kind of wild gyrations. Then you go here and you say, boy, up 11, that's a nice, loving it, just a nice trend. That's what you're looking for. Ride trends for all they've got. Let the price and volume action of the stock tell you what to do. So now we've narrowed it down. We know what to look for fundamentally. We're discussing technically now. So let's move on. Navigating the markets. Here's Hood. Hood had a base breakout right there. Look at the volume pickup there. Now I'm going to go back and show you the NASDAQ comp. Chewing all over the place. Look at that. I mean, that's the kind of stuff that make you sick to your stomach, right? Here's the spiders. Whipping all over the place. But then you go in and you look at stocks, and this is what we try to find. Simplicity. This is the same time frame, folks. Same time frame to the day. Simple base. Look at the volume pickup. And what do? You let it work. If it starts to falter a bit, you sell a little bit. Don't sell all of it. Limit your losses. Don't limit your profits. But this is really important. By selling a little bit off, you have guaranteed yourself a profit, but you've also done something huge. You have lessened stress, right? It took a little pressure off of you. Hey, you know what? I've sold some. I'm going to make money no matter what happens. I'm not going to let a profit turn into a loss, right? I'm going to make money. You can breathe. Clearer or less stress leads to clearer decision making, which normally leads to more money. But note the simple base. You're navigating the markets. And again, here's Hood, and here's the NASDAQ comp. Whipping all over the place. Here's the S&P 500, the spiders. Whipping around, chewing you up. But when you focus on leading stocks and leading groups, they will trend for you, folks. Let them. Let them. Continue onwards. I just want again, and again, I'm trying to show you what to look for in the charts. A simple base. Look at the volume pickup on that bar, and then it follows through. And it's marching. That's a good run, folks, right there. Where's it going to stop? I don't know. And I'm not saying that to be funny. I didn't know app 11 was going to be a quadruple when I bought it. And they all don't do that, please. I don't either. But maybe this is going to stall tomorrow. Maybe this is the top. Do you know? I don't know. But I do know if I sell it all, I've limited profits and not limited maybe potential loss. Let her work and see where it goes. Okay? Meta. I talked about this I talked about this, I think, this breakout 6 times before it happened. And I'm going to show you something here. And I'm not bragging. I'm just trying to show you what to look for. It's like, okay, you see this base right here? This day is 122. That's a nice base. Here's the NASDAQ comp. All right? And I'm going to go back. That's 122. It's the same day. Look at this whipping around here. Back and forth. It chew you up. Okay? That's the NASDAQ. And there's Meta. Same time frame, folks. Looks pretty tight to me. Look what it did. There we go. We own that at 644.28. Because we bought it, we added to it, we sold some into strength, so we're in good shape. We'll let it work. And I'm just trying to point out And this is for everybody, what to look for in the charts and to navigate the markets. So you can say, well, Pat, let's navigate it. What are you going to do here? Well, we've sold some. We're in good shape. Price alerts are set, not stops alerts. We'll let it work and see where it goes. It's on my front page and we'll watch it. Move on. Pegasystems, another simple base. And again, folks, watch this. High volatility means high emotions. What do you see here? The dang thing's just going sideways. You know, ain't doing too much of anything. That date right here is 114, January 14th. This is from early December through January 14th on Pegasystems. And then look what it does. Well, I messed that up, didn't I? Hold on a second. My apologies. There we go. See the base and run. So remember this period of time right here? This is from early December till it broke out on the 15th of January. Here's the spiders, same time frame. Early December. Watch this. That's January 16th. There's January 15th. What is this doing? It's chewing you up with a hard downward bias. That's spiders through January 16th, January 15th. Here's Pega. Through January 15th. See the difference? Why am I pointing this out in a very slow, methodical manner? To show you what to look for in the charts. Think about this. Chart patterns are a function of buying and selling decisions of all investors. And it literally shows a tug of war. And what do we want to see? We want to see the tug of war settle down, which is what it did here. And then when it finally does lift off, and this is navigating the markets, folks, having the discipline, having the focus on what to look for, which is why you're here tonight, and I compliment you for that, and then the discipline to wait for it. And then again, they voted here. Look at the volume spike on that bar. And there it is, and that's what it's done. It's not a massive move, but hey, compared to what the market's done in this period of time, this is good. Own it, run it. And then you got CrowdStrike chopping around, and then finally it lifts off right here on volume, heavy volume, spikes up, chops around. We sold some more, but overall in good shape. Again, it's relatively tight in relation to what the market was doing in that period of time. More examples. Pros, nice tight base here. And you can see it right in here, folks. I'll call this from December 4th through January 14th, that run right there, okay? Here's the NASDAQ comp, same time frame. This is December 4th right here, okay? And here's January 15th right there. Look at that. Look at this whipping around. That's what the market was doing. But we find stocks, we're trying to find stocks that we can, again, that's the whole gist of this meeting we have tonight. How to look for winners, fundamentally and technically, and then how to navigate them. What can we do to hang on to them? And it works. DoorDash, simple, working. Duolingo was real loose all through here, right? Did we get wrapped up in any of this crud? No, but then it finally settled down and formed a nice base. And then it took off. Look at the volume pickup on that bar. It took off. Waiting. Don't get, I'm going to slide this over. When you see this kind of action, it'll chew you up alive. Wait till it settles down and forms a nice, cleaner base. And they voted there. See the volume pickup of that bar? I'll say it again. People talk with their mouths and vote with their pocketbooks. On that bar right there, they voted. And that's where we're at. Hold on. So there's Duolingo. Now it ran up big today and then started to fade a little off the highs. So what did we do? We sold a little bit. We locked some profits and we sold 20% of what we own. That's all. We're in good shape. There we go. Managing, navigating, and managing the markets. We look at the markets first, and then we narrow it down to navigating and managing the stocks. And that helps. I'm going to drink a little water. That's another point for you. I'm going to switch gears and share something. Team, this is a higher stress job, right? Not being a pity party, but it is. Take care of yourself and stay hydrated. Also, I'm going to go off on a tangent here. This is a higher stress job. Take care of yourselves. Get away from the machines. Don't stay locked up on this stuff all the time. Walk away from it a little bit. You're not getting sloppy and complacent. And exercise. Exercise your mind. Exercise your heart. Get away from this and take care of yourselves. Years ago, I had an advanced psychology class. All right, this class was called Death in Human Behavior. We had students that they left. They couldn't stand it. And we had a professor, and I'm going off on a tangent, but it relates to what we do here. He said, I want you to take a look at your hand. You might want to do this, folks. I'm being serious. Take a look at your hand. Move it. Move the joints. Look at it. Look at the ligaments. And I'll never forget the professor paused and he said, do you see that hand? You're going to be buried with it. Take good care of yourselves. You can say, what does that have to do with stocks? It has everything, because if we're not in good health, this ain't going to matter. Okay? Which also circles back to our tactics and disciplines as far as doing things that are simple, conceptually simple, that are correct, that make sense fundamentally and technically. Resting in that, which does what? Leads to less stress, which leads to clearer decision making, which normally leads to more money. This is a quote I said at IBD meetups for years. Only the still pool reflects the stars. I'll say it again. Only the still pool reflects the stars. The most important asset we have, team, is not in our back pocket, in our wallet, okay? It's between our ears. I really mean it. Take good care of yourselves in all respects. You can say, hey, what's that have to do with stocks? It's got everything to do with it. Everything. It's what we want to do. I don't want you, I'm speaking from my heart. I don't want you to be here doing this as an investor for the next 6 months or 2 years. I would love it if you could do this the rest of your lifetime, because it will change your life. It will. It really will. So, and I temper it with this statement. Never argue with price. Never. That will help you. Let price guide you. And never get wrapped up in 5-minute charts. Here we go. There's gold. Simple base break. And it's an inflation related thing and also a defensive related thing. But look at the trend here. Look at where it found support on the ADMA. Breaks, then it just starts, and then it starts to hit it into overdrive. Look at that. Got a little bit of a stall bar here. We took a little bit off. There we go. It's simple. Here, I'll do something for you. Look at there's the base, folks. Watch this. This is fun. I'll tell you what's as much fun as getting ice cream. Here we go. Boy, do I love ice cream. Look at the base. Look at the volume pickup on that bar, folks. Again, it ain't fancy. Check it out. Oh, it's just kind of going sideways. It kind of looks like a cup and a handle. Didn't close that bad. It's got support on the ADMA. That's the yellow line. Hey, if it could take that out, that'd be pretty good, if it takes out this line. But it's going to need volume. That's for darn sure. Boom! The volume on that bar. I'll say it again, folks. People talk with their mouths and vote with their pocketbooks. They voted. And trends pay. Yeah, they do. And it's a good start. By the way, I don't want you to think like, oh, these are, unbelievable quadruples and triples. No, but they'll work. Let them work for as long as they can. You can say, Pat, have you ever had a double? Yeah. Have you ever had a triple? Yeah. Quadruple? Yeah. Years ago, I've had stocks. God, was it dry ships? Long since gone. It was like an 8 or a 10-fold move. I'm not bragging, but we just rode the trends. Okay? The company's not around here. DRYS, you could probably do Google search on it and find it. Okay? There's Goldman Sachs. Clean and simple base. The market's got wild gyrations. And what do? We just wait for things to set up and the chart pattern on the markets to set up too. And it starts to lift off, and look at the volume there. But when it's chopping around, all this crud here, we're just leaving it alone. Folks, I'm going to say this, and I said this at IB meetups for years. I'll say it again. What you're looking at here is a chart. What you have is a program that can quickly become a video slot machine and suck you in to doing things that aren't in your best interest. Have the discipline, have the focus to wait for your setup. And I'm showing you time and again. It's the most, I will tell you this. If I could only do one thing, it'd be simple basis. Okay. Navigating the markets. Yeah. Oh, and as I said, I was an IBD meeting co-leader for years, 12 years. All right. I've sat down with lunch with Bill O'Neill. I'm telling you, if you wait for the simplest cup and a handle formation and do nothing else, you'll starve to death. Doesn't happen enough. And that's not a criticism. That man changed my life. And boy, God, this was the third time I talked with him. I told him, he goes, hey, it's good to see you again. He's a good guy. Anyway, that was a loss. That was a loss. Which leads to a point. If you haven't read How to Make Money in Stocks by Bill O'Neill, invest in yourself and buy the book. It's a great book. There's other great investing books too. Mark Minervini's book, great book. Okay. Another great book. Okay. I'm going off on a tangent, but I'll tell you the biggest asset that we have, team, it's between our ears. Read Market Wizards by Jack Schwager, especially the last chapter by Dr. Van Tharp, Tharp. He's a psychiatrist or psychologist, I forget which. Anyway, it has to do, he coached professional investors how to improve. It is a great book, a great study to help you improve your investing results, your mindset. I really mean that, okay? Got to take care of this up here. So let's move on. So there's Goldman Sachs, and it's trending nicely, and we're letting it work. But we navigated the markets with it. That's what we're talking about. Kendall, right here, lifted, bought, and we waited till the market started to improve, and then it lifts off again. Look at the volume pickup on that bar, folks, and we added to it. There it is. Simplicity in the basis. Simplicity. Remember, charts are a reflection of human emotions, and there's a tug of war going on between the buyers and the sellers. We want to see that equilibrium point where the tug of war between the buyers and sellers is evened out. And then we wait to see which side's going to win. Do we know? No. But by looking at charts, you develop a great feel that you know more times than not, when you get a simple flat base, the odds are increasing dramatically that when it breaks through that top with volume, the buyers have overtaken the sellers and there's a pivot to buy. Now, I need to also say this. This is, I'm not going to sugarcoat it. Does it work every time? No. So what do? Think about this. Simple basis, price is good above the line and bad below. No day trading. You just look at the day charts to make these decisions. And the best ones will just push away. They just push away. That's what we're looking for. Net, simple base right here. It ran up and then it backed off, okay? And the next day is a quiet inside day, and then it starts to make the march. Another important point, navigating the markets. I'm really serious about this. Never, ever buy a full position at one time. I've said it before, and I will say it over and over again. Ease into the stocks. Rules of proper pyramiding. If your goal is to get to 100 shares, make your first purchase maybe 50 shares. Continues going up in price, your next purchase 30 shares. Continues going up in price, your next purchase 20 shares. If the market's a little skittish, you could start with maybe 20 shares. Continues going up, add another 20 shares, and pyramid in that way. And if it falls, don't let your last purchase turn into a big loss. Limit that, and then just let it work. And all those decisions, folks, honest to God truth, I haven't looked at a 5-minute chart in years. I rarely look at 10-minute charts. When do I look at 10-minute charts? And I want to share this with you. Navigating the markets. Stocks breaking out, and you go, God, it's lifting up. I guess it'd be okay to buy. You're looking at the day chart. Instantly, as it's approaching the pivot or hitting the pivot, take it down to a 10-minute or a 30-minute or an hourly chart. If it's early in the day, maybe 10-minute. If you see volume coming into it, it's telling you other people see what you see and they're buying it. You're navigating the markets. You got a trigger. a safety trigger to buy. If you see it pushing through there and you don't see any volume on any time frame, leave it alone. Don't impose your will on it. That'll really help you. That's the real world, okay? And again, I told you my background. I was a sole provider for a family of 6 with 4 kids in private Christian schools at the same time. Only source of income was investing profits. I had to make it happen. And I didn't day trade either, okay? No. I tried to let those things work as long as they could. Move on. Octa, simple base right here, right? Now we wait. Wait for your pitch. Remember this. There's nothing wrong with sitting and waiting for the high probability setups. I said this at the meetups for years. I'll say it again. This can become a video slot machine. It'll suck you into doing stuff. Don't let that happen. Wait for your pitch with price and volume. It will help you. And again, as I stated just 2 minutes ago, never buy a full position at one time. Never. Ease into it. Let price, preferably backed by volume, let price have you buy more. Have price have you earn the right to buy more. Let the stock action do that. That's $1 million lesson right there, folks. And if it ain't there, you don't do it. Also, I need to share this. Run your race. Don't get wrapped up in the compare game. Like, oh God, they're doing this and they're doing this and they're doing this. Learn from them, okay? Study the chart formations, follow up with the charts, monitor them, and then eventually you develop, and it's not an ego game, you develop your skill set, okay, on what to look for. And it works. Do I, read any newsletter? Nothing. Everything I need is in my screens that I discussed earlier, all right, and focusing on stocks that have simple bases in leading groups. Always with a high composite rating, as stated earlier, and I prefer an accumulation distribution rating of A or B. Now, what does that tell us? It tells us that it's being bought. It's not being sold. And a simple chart pattern, as we just discussed. I've just shown you a bunch of them. And we're going to show you a few more here. Let's move on. I don't want to take too much of your time, so let's go on here. There's RCL, lifted off. Here we go. Reddit had a base break right here. Starts to lift up, started to fall a little bit. We took a little bit off given the market action, and now it's starting to trend. And we're in good shape. Where is it going to go? I don't know. Maybe it's going to stop tomorrow. Okay, really, let's be pragmatic, folks. We don't know. But if it trends, we'll let it work as long as it works. You could sell a little bit off, guarantees profits, and lessens risk, which leads to clearer thinking. That's navigating the markets, folks. I'll say it again, folks. What's up here? That's the biggest part about what we do. It's not this. We got to get this screwed on straight before we tackle this. There we are. Spotify. It's just kind of going sideways, And then it starts to lift up, and there's some volume picking up in here. Do you see that right in here? Volume picking up. And look at the march. Off through the 8 EMA, that's the yellow moving average, and it's trending. We locked a little profit in, and we're in good shape. By the way, numbers. When this was bought, these were numbers before the breakout. Earnings up 363%, sales up 25%. Hey, folks, that's what you want, okay? One or the other. You'd prefer both, but one or the other. Get good numbers. It doesn't have to be 300%. I really prefer anything over 40%, 30%. 30% earnings or 30% sales. By the way, that's a quantifiable statement from O'Neill Research too, okay? So and again, I taught it. I taught it for years. Let's move on. So it's working. What do? We just let it work. Price alerts are set. Look, I've got an upper alert set and a down alert. Not a stop, just an alert. And we'll let it work. Maybe, I don't know when it's going to stop. Maybe it'll stop tomorrow. Maybe it won't stop till next week, next month. I don't know. I don't need to know. We let price and volume action guide us. We talk about the whole gist of this is navigating the markets. The biggest part about navigating the stock market, and that's the biggest part of this whole webinar tonight, is navigating your mindset. What's going on up here? What's going on up here, folks, has a profound impact on your decision-making process in relation to the stocks. Has it in relation to all facets of your life. Okay, so that will help you. Let's move on here. Viking starts to lift off here, runs up, pulls back, take a little off here, okay? And now it's trending. Note the trend of the ADMA. Price alert set. See the upper alert and lower alert? And team, I got to be honest, and this is for everybody. I don't know where it's going to stop. And you said, oh, that's funny. No, we don't know the future. I'll say this quote again. This is my own. When we accept the fact we don't know the future, we see the future and the present more clearly. We just let price and volume guide us. That does something else very important. When we accept that fact, it takes the stress off of us. We don't have to impose our will on it. Stress derails thought processes and decision making. Okay, so we've minimized stress. You can't eliminate it, but you've minimized it, which leads to clearer thinking. We'll just get in line and let it work. Okay, and breathe, breathe. And then we round out here. Bird. Simple base breakout, just going sideways, and it lifts off. Look at the volume pickup on that bar. And it's trending. It's working. Through all this chop, we just stayed away. I'll show you something. I want to train our eyes. This is an important lesson for everybody. Don't always look at charts after the fact. Pull them back to before they broke out. Like this. Not just kind of going sideways, and I see these tops here. I guess if it starts to lift up through here with volume, well, that'd be pretty good. By the way, all these stocks have good fundamentals and or technicals. Okay, none of this, we don't have any junk in this list. All of them had a high composite rating when they broke out. Okay, all of them. I demand that. Okay, and it puts by resting in that quantifiable fact, it allows us again to navigate the markets, but it also, knowing it, minimizes stress, as I've stated, which leads to clearer decision making. So there's Vert, and it's working right here. And folks, please, it's not a huge move. I'm not saying that at all, okay? But it is a start. Where's it going to stop? I don't know. I'll come back to it. When we bought this right here, going across here, at 98 bucks, gosh, I didn't know it was going to go up to 400. All right, folks, that's a quadruple. I didn't know it, but you got in line. Now, I said it earlier, I'm going to say it again. This is important. Navigating the markets, navigating yourself. The quote that always floats out there, you'll never go broke taking a profit. Well, if you sell this for $5, but then you have a string of, $2 and $3 losers, you defeated your purpose. Let it work. Let it work. You could sell a little bit, guaranteeing yourself profit and lessening stress. Let it work. Let it work. And that's where we're at. Navigating the markets and navigating the stocks. And every once in a while, you're going to have something that goes up and then it falls again, and you have to sell it. Here's Google. We bought Google. I'm not going to sugarcoat it. We bought Google pushing through this top here on volume. All right. And it gets quiet, and then it starts to lift again. Okay. Now, this is an important lesson here. You see the note? Put notes on your charts, folks. You want to navigate the markets? Be prepared. We knew that this stock had earnings on 2/4. You ready for this? That's 131. Right there, that's 2/3. We knew on this, I pounded the table. Hey, this has got earnings coming out. Okay, we got to be careful. Oh, the next day it's going up. But we know that after the close, this is 2/4. Okay, after the close on February 4th, this stock's going to report earnings. So what did we do? You said, God, that's a good close, man. You got to stay with it. No, you better sell something off just in case, because you don't know what the news is going to be and you don't know what the response is going to be. So we did. We sold some and locked it. And team, this is for everybody. It's a small profit, please. I'm not pounding the table like, oh, God. But we lessened risk. We locked some in, locked some profits in, but we also lessened stress and risk. And the next day, boom. And I'm so glad that we had sold some, that we were small to start and we sold some, knowing that earnings were coming. The moral of that story is this. Did we lose a little bit on this? Yes. Did we have a full position? No. We didn't start with a full position and we didn't add much. And then we sold just to be careful into strength to get lighter. If earnings are coming, earnings are coming, don't carry a full position into earnings. And that's a major portion of quote unquote navigating the markets, letting price and volume guide your actions. And again, I don't care about the spiders. About the Dow, but here's the spiders showing it again. And I'll make this bigger to help you. Oh, it's going up. It's going up. Oh, this is it. I stalled a little bit here. Boom. That's wicked action. And then, it does it again right here. It runs up, but then it reverses down on a pickup in volume. And then look what it does the next day. They knock the car out of it. Wide and loose actions indicate high investor emotions. We want to navigate the markets. Here's a fact for you, folks. If you want to navigate the markets, you must first start with the person who's steering the ship. You're the navigator, right? Not anybody else. You're the captain of the ship. You're making the decisions. And so we get in line with what's going on in the stocks and in the markets and help that, quote unquote, navigate ourselves and navigate the markets. And I'm not being cute and funny when I say that. But this is a serious business. This is true confession. I've been doing this a long time. I've had grown men call me up crying through the years. This was a long time ago. Pat, I don't know what you can guess the word, I'm doing here. Okay. And I said, let's talk it through. And the little conversation that you and I just had now was the kind of conversation I had with grown men. It was primarily men to do this. And you can say, what about women? Now I have to share this with you. We're going a little off tangent here. Navigating the markets. It's been proven, supposedly, I'll agree with it, women are better investors than men. So don't think this is just a male game. It's not. Okay. It's for everybody, all of us. And that's why we started Mission Winners, is to help speed up the learning curve on what to look for fundamentally and what to look for technically in the dang charts. And then combine both together and then say, now what's going on up here that could help me make money or sabotage me? We address that all the time. And again, I've got degrees in psychology, background in psychology. The idea of simplicity, less stress leads to clear decision making. Okay, that's navigating the markets, right? Proper navigation of the markets lessens stress, which leads to clearer decision making, which normally means to better profitability, right? And that's the whole foundation gist of this meeting that we have tonight here, but also at Mission Winners, what we do. We just get in line with what's happening, and it works. It works great. I wanted to share that with all of you. I mean, I could show you more charts of winners and things, but I think the key point is how to handle it, what to look for again, fundamentally and technically, and then how to manage it. But more importantly, that's the real foundation of this meeting tonight, how to manage yourself with good decision making so that you can be in here for the long term. Now, I'll share this with you. At Mission Winners, as I stated, we do this. We teach this all day, every day. And you can say, what do you mean? You make a video and, then that's it for the day? No, I give commentary throughout the entire day with posting, not overwhelming, okay? And, oh, look at this. You got to do that. Oh, folks, look at this one. No, God, no. High emotions, I'll say it again. High emotions and good decision-making in any facets of life are mutually exclusive. We don't want that. Focus on tranquility. It'll really help you. That's what I wanted to share with you tonight. I hope this helps you. And I'm going to circle back in the last part I'll make here. Folks, I've got the sheet here too. Focus on stocks This will dramatically improve your investing results. Focus on stocks with a composite rating, preferably 90 or higher. I've cut mine at 88. Why? Because it might be 88 and Monday, Tuesday, Wednesday, and then it improves with stock action. And on Wednesday or Thursday, the composite rating's over 90 and it takes off. But guess what? I had mine set and missed it. So that's why I have it set at 88, just a little bit below. I have relative strength rank. I don't have my relative strength set at 90. I've got it set at either 80 or 85. And stocks within 20% of it, you guys. No low price stocks. I want quality, foundation, fact. Leading groups produce leading stocks, and leading stocks produce leading groups. When you combine both foundations together and wait for it to set up properly on the chart, it's set up fundamentally. You wait for it to set up technically, and you wait for the market to pick up. You hit it and let the market guide you. Mission winners, markets comes first. Markets, industries, sectors, stocks, institutional support, outstanding management, outstanding product, or outstanding service. And I'll say it again, the N in mission winners, never say never, mindset. And if you think about it, team, from a pragmatic perspective, pretty much dang near everything we talked about tonight is related to mindset. The mindset and then the tactics that flow forth from it. So that's what I wanted to share with you. Just again, don't get angry. That's not conducive to good decision making. If you follow the tactics that we discussed, you'll be in here in the game for a long time. And I'll say it again. I was managing a ton of money. And I was just a young buck, okay? Young. Into the crash of 87. And following price and volume guided me to get out before the crash. All my accounts were flat. And I'm thankful. I'm not bragging. But the market was telling me, go back to 1987 and take a look. Go back a couple weeks before then and we'll look at price and volume. You'll see exactly what I'm talking about. So anyway, I thank you all for your time. One of the things, they say, thou shalt not steal. Well, there's different things you can steal. You can steal a person's valuables. You can steal finance, whatever. You can steal a person's time. I had a very wise man say that to me, a man who went to Oxford. I mean, he wasn't smart. He was wise. And he challenged. He goes, can you steal a person's time? I said, yes. He goes, don't steal people's time. All right. Provide value to help them. And I think that's really big. That's, again, at Mission Winners, that's what we're trying to do, is to help. So, Owen or Rich, any questions or anything? Or does that sound like a good wrap?
Hey, Pat. Yeah, we do. We have just a few questions here to take care of.
I think it's
First
quiet.
one is from CJ.
I
CJ
think that's
wants to take
good.
a look back at
Well, team,
Meta.
I thank you all very much. And this is for everybody out there, wherever you are. And I have to compliment you on something. When everybody else is out horsing around, you know what you just did? You just got better. You got better. You now know more than you did, 40 minutes ago, 45 minutes ago? You're that much better. That's positive. Move forward. Always move forward. Remember, Kanai, constant and never-ending improvement. And the biggest asset we have is up here. We're going to take care of it with the financial or with the tactics that we have and the mindsets that we have. We know what to look for fundamentally. We know what to look for technically. We know what to do. We know when to do it. We know when to back off. We know when to control risk. And my phone is ringing. Who is this? Then it's Owen. Hold on one second. Hello.
Hi, I don't think you can hear me. Just need to probably turn your speakers up a little bit.
Oh, I had him up. Can you hear me? Go ahead and talk.
All righty, here we go. Can you hear me now?
No.
Okay. Well, I'll tell you what, let me read you the question over the phone.
Okay, let's do it.
and while I talk in the mic at the same time, and so everybody hear it, and then we'll
Okay.
just handle it that way.
And you know what? My speaker, I don't have it read down on my speaker where it's working. I'll be dipped. Okay, we'll handle that. Okay, brother, go ahead.
All righty. The first question is from CJ. He wants to take a look at Meta.
Righty. Thank you for asking, CJ. I appreciate it.
And he says that going back to the time frame that you were talking about earlier, he says it didn't break out over that base on volume the first couple of days. So did you wait the first 2 days until it broke over the base, or did you wait until did you still buy it the first couple of days it broke over the base, or did you wait for that third day with the higher volume?
Good question. Thank you for asking. Okay, it lifted across the tops here, but as he pointed out, look, there wasn't heavy volume. Or CJ, there wasn't heavy volume. But then look at the next day, and I'll make this bigger to help. The next day, look at the volume pickup right there, folks. Right there. On this bar, the stock did volume of 9.9 million. On this bar, 19.1 million shares. Almost did 10 million more shares right there. People talk with their mouths and vote with their pocketbooks. They voted, we bought. There you go, right in here. Good. And we added. And we sold some into strengths. We're in good shape. That's what we're looking for. Good question.
All right, JR wants to talk about composite rating. We get this question a lot. This is the composite rating as it's tied to IBD. He wants to know, is there an equivalent out there on any other platforms that do kind of the same thing as the composite rating does for IBD?
Oh, good question. When you read the question, was that just to me or is that to the entire audience?
That's to everybody.
Oh, good. Okay, very good. So I don't have to repeat it. Great question. I haven't seen anything else like composite rating. And please, I'm not pounding the table on market surge, and I just haven't seen anything else. And I've looked at a lot of different products. I just found that the composite rating, this true confession, folks, if I can only have one filter, only one, it'd be composite rating. And I'd set it at like 88 or higher. That's it. But I will also share this with you. Don't do that. All right. You've got to have other constraints on that. I don't want to look at $3 and $4 stocks. I want to find quality. I want to find stocks within 20% of 52 highs, et cetera. Everything that we just talked about in this webinar. Focus on that strong composite rating. And a lot of people say, well, let's cut it at 95. I'll give you that supposition again. Okay, you run your screens on the weekend and you got a stock with a composite rating of 90, but you've got yours cut off of a minimum of 95. She's 90's dang good, but you won't know about it. All right. And that's why I cut mine at 88. Just a little looser, that something might be 88 on the weekend, but maybe on Monday it lifts off and that composite rating picks up over 90. I will know about it. But if I have it set too high, I won't even know about the breakout. And that's why. Now you can say, well, let's drop it down to 70. No, we don't want to do that. We don't look at a million charts. I'll set mine at, that's what I have mine set at, folks. I'm not lying to you. I've got mine set at 88. 88 or higher. That's one of my constraints. And it catches, well, you could ask people on our team. It's caught some good winners. And for that, I'm thankful. So 88 is, I think, a very, very good compromise. Now, that's just me. If you want to do something different, that's okay. But I find 88 works great for me. Oh, also, I have to say, no low price stocks either, folks, okay? I think no low price stocks. Cut it off like, I don't know, 16, 17, 18 bucks a share. Don't do low price stuff. It's low priced for a reason. Stick with quality. There you go.
All right, last question. We're going to talk about Google. Kita says, what is your strategy for gap downs? I think you talked about Google.
Great question. And who asked this?
Kita.
Kita, thank you for asking. Great question. We bought this and then it started to get a little squirrely and we got lighter. And also, you can't catch me in a lie here. Let me get rid of these lines here. See that right there? Earnings 2.4. I mean, I pounded the table with the team over and over. Hey, this stock's got earnings. This stock, don't buy a lot. Don't buy a lot. Also, on this day right here, hey, it closed strong. I'm going to slide this over so you can see what we're looking at. Oh, this is pretty good. This is the day before earnings. I'm telling you, or the day of earnings. Okay. Oh, this is what it did. They're going to report after the close. This baby's going to go. This is a great real-time, real-world lesson, folks. Yeah, they got earnings coming after the close today. Volume's picking up. Man, I'm going to load the boat. No, please don't. This is for everybody. Don't impose your will on the stocks and the markets, and always practice good risk control. Never buy a big position going into earnings. Never. I always sell some off and get lighter if I own it at all. Oh, and you can say, well, have you ever done that? Oh, yeah. God, I guess it was about, I don't know, 2000 or something. I had a stock that had earnings coming, and I thought, I didn't have a lot of shares, but I'll stick with it. Okay. And I had enough though. It gapped down. We lost like 20 some odd $1,000 right at the open. And that was stupid. Okay. So don't do that to yourself. Don't do that to yourself. Manage it accordingly. And I'll say it again. Buying the day before earnings is extremely risky and aggressive. You may be a hero, or you could have a lesson happen that you could tell other people other times. Go, don't ever do that, because those are the ones you'll remember. It's the big hit. So we don't want to do that. Always control risk, folks. Remember this: we are not in this for the next week, month, year. Lord willing, you are in this for the rest of your life. This is what you want to do. This is what we do. There's nothing else I'd rather do. This is fun. This isn't work. It's fun, rewarding, and fun. So good. Any others, Owen, or is that?
There were a couple others hidden here. Let's take a look.
And folks, first off, thank you for your attendance. I really mean that from my heart. Thank you for your commitment. I respect it. When everybody else is out horsing around, you're getting better. Good for you. Okay, good buddy.
All right. Just to follow up from Kita, do you sell after earnings in the case of a gap down? So if you're holding and you're caught in that gap, what do you do in the morning?
Good question. First off, thank. Did they hear the question, by the way, when you were reading it, or was that just to me?
Oh,
Oh,
there.
good. Very good. Thank you. I don't have to repeat it. Rule policy number one: we never carry a full position of earnings. We were always smaller, just in case. If that happens and you get caught in a gap down, what I will do is I will watch it. This is like my 10-minute rule. I'll watch it for 10 to 15 minutes and see how it acts. Looking at a 10-minute chart, watching price and volume. And if it stabilizes, I'll watch it closely. But if it starts to fall, I will sell more. And this is the key: if it takes out the lows of the day on that first 10-minute bar or whatever, I sell the rest. I will never argue with price. Never. I had a good friend of mine trade my account years ago, and he argued with price. It was a $600,000 account. This is back last century. And he took that sucker down to 400,000 in a week and a half while I was gone. That wasn't good. He argued with price. Boy, did we have a heart to heart. I was mad, and I'm keeping it clean. Anyway, moral is don't argue with price. Gap downs, manage it. As an old brokerage friend of mine used to say, okay, who managed funds for people through Wall Street Week, on Wall Street Week, get livable. Get livable, manage them, and avoid the problems. Avoid those kind of problems by being very disciplined and small before earnings. That'll help a lot. And you can see I might miss a gap up, and my response is, yeah, but you might miss the gap down too. We protect ourselves.
And
Good.
the last question is from JR. JR asks, should those of us with full-time jobs not trading during the day? He's not trading during the day, he says, but does have a full-time job. And should those of us with full-time jobs use stops instead of alerts?
Good question. Now, you read that question to me, Owen, and I thank you. Was that also broadcast out to the room?
Yes.
Okay, very good. So I don't have to repeat it. Thank you, sir. Good question. If you have a full-time job, you can still do this. There's no problem with doing this. But here's how you do it. And it works. Okay. And this is what I do if I have to leave the office or the desk for a little while and there's something going on. Put a buy stop in, but don't go too big. You say, well, I won't make as much money. But as you cited, JR, you're trying to control risk. Put a buy stop in, but don't do it on heavy shares. And then at the same time, and this is something most people don't know, you put in a buy stop, okay, and you put in and y'all might want to write this down. Most people don't know this. It's called a contingent sell stop. Most people have never probably heard of it. It's a fact. A contingent sell stop. You go, what the heck is this? The sell stop will not be pushed on the books or become a working order or an order, not a trigger. Just you've placed the order, like a sell stop or a buy stop. It will not be put on the books on the trade desk unless the buy stop is triggered. The sell stop will not become an order, okay, on the books, contingent of the buy stop being triggered. It's called a contingent sell stop. And we did that in the brokerage business for when I was running money. And I managed money through a lot of entities through Fidelity funds too. And it works. It's called a contingent sell stop. And I do love buy stops and sell stops. It works. It works really well. Another key point, I read this years ago when I had a brokerage friend of mine share this with me. If you're losing money over your stocks, sell down to your sleep point. And it sounds corny, but it will really help you. This is what I'm after. Okay, I'm speaking from my heart. Is we're not here just for the next 6 months or year. You know, you want to be doing this. This will change your life. I'm not kidding. If you stick with the rules and tactics we talk about, and always manage risk, always be thankful, and always be humble, but always control risk. I'm not kidding. I'm not being negative. I'm just a realist. There's risk in market. So we control it. And that helps us. And I'll say it again. Never go too big on any one stock. Never. In fact, never put more than 20% of your account in any one stock. Never. You can say, yeah, but God, I could make a killing. Or you could get killed. So we don't want to do that. I know these are long answers, folks, but I want to be thorough and do you justice. So that's why I try to be thorough. Any others, good buddy, or is that a wrap or out?
No, that's a wrap.
That's beautiful. Excellent. Owen and Rich, I thank you. Folks, thank you for being here. I appreciate it. You know, they always talk about in the Bible, thou shalt not steal. I'm not getting all scriptural here. Don't think that. But I'll tell you what, I'll never forget. I had a very wise man answer me. He goes, what are things you can steal, Pat? You can steal a person's possessions. You can steal a person's, money, whatever. He goes, could you steal a person's time? This man went to Oxford. I go, God, I never thought of that. Yeah, we don't want to steal people's time. That's why what I came in here with tonight, I had this all down. This wasn't cold. Just like shoot from the hip. No way. I'm not going to waste your time. I don't do it at Mission Winners. I don't do it here. So I hope this helps you. I hope this helps y'all. That's what I want, is to improve people's investing results. So Owen and Rich, I thank you for your help as always. For everyone that's here, thank you for being here. Thank you for your attendance. Thank you for I respect your commitment. When everybody else is getting ready for a Super Bowl, go Chiefs. Just kidding. We're watching this. So good deal. And that covers it, Owen. Sound good?
That's it. Yeah.
All right. Thank you for everything, good buddy. I appreciate it. Thanks for fixing the computer. And I look forward to talking to you tomorrow morning.